Are you getting bored with the stock market, the implied volatility of the S&P 500, and the overall historical volatility has dropped to historic lows? So a lot of people have actually given up on doing trades. Ironically, over the past week or so, I've had more and better trades set up than over the past month. So I wanted to take this chance to go over a couple of the opportunities that I have been discussing and doing with Clubhouse members. I call it 2 stocks in 2 minutes, and we'll also talk about what it might take or when we might get out of this very low implied volatility range. As an FYI, I put up another screen here that is meant to be for our YouTube live coverage. We started doing some YouTube live broadcasts. If you want to get alerts on those, make sure you follow me on Twitter and you sign up to the YouTube channel so you get pop-ups on your desktop or on your phone when I post go live on these YouTube things. So let's have a look at 2 stocks in 2 minutes. Alright, so first stock we're going to talk about real quick is the stock of FireEye. The ticker symbol is FEYE. And while this stock has been one heck of a pain in the butt over the years for anyone that tried to buy it for more than... The stock has now finally done something it hasn't done in some time, and that is break back above its 200-day moving average. Now that alone is not a reason to buy a stock, just to be sure, but let's have a look at it a little bit more closely. This is a company, or a stock I should say more specifically, that has been in an absolutely defined downtrend. And you can see after earnings here on the 4th of May, I believe it was, the stock, it didn't just jump back past horizontal or diagonal resistance, but it also cleared that red line, that 200-day moving average, which you can see if you go back in time, that stock is actually, or that moving average has actually been a pretty good area of support and resistance, or at least from a reference perspective. So the fact that the stock gapped higher past this area, I do think that constitutes as a what we call a breakaway gap in technical terms. I do have a course on gaps, by the way. If you guys want to take that, go to thestudytrader.com/products. If we make a weekly chart out of this real quick, you guys will see that on the weekly chart we have a very simple breakout here as well. In this case here, we're using the weekly bar. Very, very powerful. I like it. The other stock I'm going to talk about is NVIDIA. It's hard not to talk about it on a week like this about NVIDIA. You can see NVIDIA had a very strong rally on May the 10th after earnings. It broke out of this consolidation range and it had been for a couple of few months actually. And I do like the stock higher from here. I don't think you have to chase it right this second, but I do like the way it's setting up. I do think ultimately through a multi-week, more likely a multi-month range, the stock could be up at 140. So I like the way it's trading. I like the way it looks on a daily chart. I like the way it looks on the weekly chart. On the daily chart, I look at it something like this. So I like the stock here. Maybe looking to nibble on a little bit on the with stock. For options, if you want to trade options, I think selling out of the money put spreads. Specifically, I sold at the time I did this on May 10th a July 110-105 put spread that I like so far. So that was a little bit more than 2 minutes on those 2 stocks, but the last thing I want to talk about real quick is the S&P 500. I want to talk about the S&P 500 as it relates to the timing of when we might be able to see a breakout to the upside. Now, honestly, or to the downside, I don't know. What I do know is that from a tactical tactical perspective, I do think the S&P has further upside. I do think the SPY can easily get to 245, maybe it gets to 250. But what I do also think is that this low volatility environment, and it doesn't take a genius to figure this out. The VIX here is very, very low. The VIX below 11 and even below 10 where it was for the past few days. That we hadn't seen that since 2007. And I remember the last time that happened wasn't a very happy outcome from stocks. So bit of a warning sign here. I'm not sure when we break out, but I do know that I want to be protected. Personally, I'm long some S&P 500 straddles, which is to say I bought at the money calls and at the money puts in the S&P 500, and that trade is most likely going to make money as long as implied volatility rises. And of course, if the stock moves or if the S&P moves in one direction or another, all the better. That's it for today, guys. I hope this made sense, and I'll see you guys in the next vlog.